Hi, everyone. So I thought the Fed was not even thinking about raising rates. Well, maybe they don't have to do it. Maybe the bond vigilantes are back. What do you think? So, on the DSI, it was in the 80s and 90s for weeks when we were doing this, TLTs like a 20-year treasury. I just couldn't figure out why people were so bullish bonds. So the 10-year came out of here pretty good. And, for people that didn't want to trade bond futures, I've been talking about TBT in the low 15s, here it is. And I think we're going to 18. That's just on the daily. We really could stretch when you look at the weekly, just a minor correction. There's that 18 again. But yields are pretty important. The only thing that really responded to the higher yields was the yen, and the market could go up with yields going up. In fact, yesterday with yields going up, even the weakest sector, and I know Steve will talk about this, the XLF, I don't blame him. He hates the banks, but they're getting a lift and threatening here. They've been underperforming for, I don't know, a decade. And even with the rally we had yesterday, not much follow through on NASDAQ. Microsoft still didn't take out Friday's high. I think it's going to give it a shot, but even today S&Ps are higher, NASDAQ lower. Still think a right shoulder is developing here. And I'm looking at this Aussie Kiwi here. It's down pretty hard right now, to see if maybe we could get a right shoulder here and hold the lows. So when you look at the 4-hour, maybe it's a little clearer, if this is a shoulder and this is a head, and now we're getting some type of ABC. You got risks of lows, and if we get a turn in the next couple days back over 108.50, looks pretty good. I still haven't done anything with Euro Pound, but it sure looks like it wants to come out of here. It's just a real sloppy technical picture, but it held the 61.8 back here, and consolidation supposed to be sloppy after a straight line move like this. And I just wanted to show you a couple of things because we have Angie Setzer here as our guest today, and just show you how the grains are acting. And they're acting great when you look at dailies. Okay, there are the beans, corn, wheat, and you may feel late, but a lot of these things are really just kind of embryonic. So we haven't even had breakouts of major areas. I know we've had a big advance since 2019, but I think that these grains are just embryonic. And I didn't get to say hello to all of you guys. Whatever the dollar does, a weaker dollar is not going to hurt the cause, right? Alexander, Royal, Kevin, Ren, Brock, Hugo, Arena, and G, Money, Abel. So all of you guys, sugar, yeah. All, anything you can eat. Because I'm going to talk to Angie. There's already what they call a soft, what is it? Famine, or whatever. They're cutting down the amount of food the Chinese can eat right now. I forgot what they call it. Soft rationing or something. So they're already no, that's not it. Yeah. Oh, the soft commodities. Yeah. But they're already, getting their population used to consuming less food. Hello, Jeffrey. So I just wanted to show you those because Angie Setzer, the goddess of grain, is going to be with us at the top of the hour. So with that being said, I'm going to bring Blake on. Yes. Okay. Good morning, Blake.
Coach.
How are you, buddy?
I am, I had one of those nights. Every once in a while they get
Can't
me.
sleep.
I went to fall asleep, and 3 hours later I'm still laying there going, man, I wish I could fall asleep.
I know.
And then I finally fall asleep, and
then the alarm goes off.
I don't know why that happens, and I'm a pretty sound sleeper, meaning that I can close my eyes and just be, I can be out pretty quickly. My wife hates it. She's so irritated that happens most of the time. Where it might take her an hour to get to sleep, and for me, I just close my eyes and boom, I'm asleep. But every once in a while, I get these random, no reason. Yeah, I'm just laying there, flip flopping.
The mind.
Yeah, whatever. And that did happen last night. So I am a little tired today, and fortunately, it's one of those days where we don't have a whole lot going on. So, when I got up, I'm like, markets didn't even really move, and lo and behold, they really didn't move at all. I mean, you look at the euro dollar. I mean, we've had a what is that, 35 pip range thus far overnight. That's not a whole lot. The cable was moving, and there was news. This came out. This headline kind of knocked down the cable. EU to ignore October 15th Brexit deadline, betting UK will back down. I mean, I don't know what that actually means, but the cable initially didn't like it. It slipped from like 60 to to the teens, bounced back, and here we are. That's like pretty much most of the activity that we've seen in the FX market. So it's been pretty quiet. Remember, we do have Fed Chairman Powell today. He is speaking. He's speaking at I want to say it's a conference. Let me see if I can get the data for you. It is blah, 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 blah. U.S. Economic Outlook at the National Association of Business Economics annual meeting. So he's slated to speak there. And that's in about 2.5 hours from right now. So, will that be a market mover? I don't know. I'm not sure if it's going to be a market mover or not. I mean, we all know that the Fed's going to keep rates at zero forever. So, what's it going to, what kind of narrative is he going to float out there today? Right, Coach? I mean,
I don't know. Maybe someone's going to ask him what's going on with yields going up without them raising rates. That'd be a good question. How about that?
I heard you talking about that earlier, and
that was your chart of the day too.
The chart of the day yesterday was the 30-year, and this is a big break. I mean, we're below the 200-day moving average. I mean, we haven't been here since summer. What do you make of this move?
I think that rates are going the higher and steepening curve is what we're getting.
I'm actually really happy. I locked in my new rate last month.
Yeah.
Well, last month, actually, it was last week or a week and a half ago, and it's like this ridiculously low rate. Like it's crazy.
Civil War was the last time they were here.
Maybe, I guess.
Honest to God, really?
Really?
Yeah.
Oh, wow. I mean,
that's a while ago.
When you're getting below 2.5% on your mortgage, you're like, wow, how do you not do it? So, but anyway, I guess yields are going up. The thought process could be, stocks are going to go higher, pricing in a potential Biden win, you sit here and you go, well, why are stocks so strong? Why are stocks holding up? And I think the narrative is right now is that Biden has such a big lead on Trump that it's not going to be contested, or if it's, you can't really contest a result when you got a 10% plus lead. And I know we all are going to sit there and go, man, we've seen that before and we've seen it change. And it definitely can change, in 30 days from now.
Joe,
No
the
doubt.
smartass, is asking if I fought in the Civil War. No,
Well,
Joe, I was the bugle boy from Company C. I couldn't fight, Joe.
Okay, so, but the point I want to make here with equities is they continue to grind higher because the market's not worried about some sort of contested result for now. Does that mean it's, we're going to remain this way? No, but I don't think that yesterday's move by Donald Trump has helped at all by, leaving Walter Reed, doing a photo op.
Did you see how he was breathing after he walked the stairs up there?
Yeah, I mean, I saw that. Who knows how
Kinda.
he's really doing? I don't really know.
Looks like he was having a hard time breathing.
But the point is, I think that both sides, both Republican and Democrats, probably saw it as a little premature. And so I don't think his numbers are improving. So if his numbers aren't improving, stocks should continue to go higher. And that's what we are seeing right now. So, is the S&P, we're getting up towards, that 3420 level resistance.
Yeah.
Are we going to get up there? Are we going to get up to the 3445? Sure does seem like it. This market is like in a trance right now.
Any news on a rescue package? They could be able to get done?
They are. There was a headline that said that things are going slow. That was a political headline. That the conversations are still ongoing. So the market sits there and goes, well, we still have a chance. There's still a chance that we're going to get a deal.
Yeah.
So stocks are staying bid. There's no reason, if you own stocks, there's no reason to sell because a deal's coming, as far as you know. And like I said, the election, the margin, the lead, the Biden lead is still wide. So there's no reason to sell right now. And so we have stocks that are near resistance. Now it is Turnaround Tuesday, isn't it?
Or as Ziggy said, or it could be Tepid Tuesday.
Tepid Tuesday. That might be more it. But regardless, I think it's going to be until we get some definitive news on stimulus. Sorry, guys, you're gonna have to excuse me yawning from time to time because I'm working on 3 hours of sleep. So, while the market is thinking that a stimulus deal is going to get done, we're going to continue to grind higher. There's one other thing I want to bring up before I go into the bias chart is that Congress is, they're negotiating the stimulus deal. And if it comes out in parts, I don't think that's going to be favorable. So if they find some sort of common ground and they say, well, we're going to, do this, we're going to pass this part of the stimulus bill here and another, I don't think that's going to be a positive result by equities, because equities are going to look at that and say, well, chances of all those pieces getting through in the end are going to be slim. So just think about that, because that was kind of the topic of discussion yesterday. I don't know where they're at today, but it's just something that I thought about off the top of my head. Okay, let's talk about currencies and where we're at. So the euro dollar is closing in on the 50% retracement, and we're still challenging the underside of this trend line or the neckline. And you can see we rejected it yesterday. We're bouncing around, but we're not getting any downside yet. So I don't want to get too excited about the euro lower. at this moment. I told everybody in the chat room yesterday, hey, you know, as long as we stay, you know, above 70, I'm not getting too excited about the euro. And, you know, we traded basically above 75 and into the 80s and 90s all last night. Now, last night we did dip, but I was asleep. And so that the nice thing is now that tells us today where the support in the euro dollar is. The support in the euro dollar is not only at 117, but it's the lows, which is 117.65. That is support for today. It's not great support, but that's where, you know, if we do break that low, you know, we break through, change the color there. We break through that low, then, you know, we might trade back down to 17. So that's what I'm looking at now. Now, resistance, we're near the highs. I mean, it comes in at 118, but 118.10 is the 50% retracement. Let's get rid of this for now. The 50% retracement is right here. So because of that, let me get rid of this too for now. Let's pay attention to 118.10 just in case we hit new highs. It's possible. I still want to be bearish while we're below this 118.10 level. I know we're teetering on, oh crap, we're going to go back in the range, which I really don't want to see, because I'd rather the market be directional versus range bound, but it is what it is, you know, as far as the currency market goes. You know, I'd love to see this neckline just reverse and, you know, for us to trade lower, but that doesn't mean we're going to. What I want to happen and what happens are, you know, two totally different things. We do have a bit of a wedge, so we could be developing, you know, to roll over, but we have some work to do, frankly. Cable. So we rejected 130. You guys knew that 130 was going to be resistance. Hopefully you guys weren't chasing the market up there. You know, that's resistance. Beyond that, we've talked that in case we get up to this underside of this broken trend line, it comes in around 130.75, just in case we break higher. Support, 129.15 is the low. You can see all this right at 129. I would say 129 support today, just in case we make our way down there. Aussie. So the RBA met. The problem is it knocked the Aussie lower, and I didn't really see anything that jumped out at me like, why is it lower? Maybe there's something that I missed, but not that I saw. But also keep in mind, I'm a little tired, so maybe I didn't catch every single detail as I was combing through some of the comments. But what we are doing is we've put in a pretty key pretty key resistance at 72.08. So that's a nice little double top there. I'm going to write down 72.10. We're still bearish while we're below the channel support, previous channel support. Support today is 71.30, because if we break below that, then you have a, you know, nice double top. You know, breakdown should take us down below 71 cents, just in case, you know. So that support's going to be at 71.30. All right, here's a Kiwi. Kiwi's really quiet, rejecting resistance at the 50% still. And that comes in at 66.60, as we wrote down yesterday. The low yesterday was 66.25. We wrote down support being 66.10. I still think that's probably pretty good support. So numbers are the same from yesterday. Okay.
Yep.
Dollar Canadian. You know, we're holding the neckline. Still trading pretty heavy though. But I mean, look at crude oil. Crude's at highs right now, and crude's back above 40. So, I mean, I have to admit the dollar Canadian's holding up pretty well based on where crude's at, based on where stocks are at. But that doesn't mean that we can't break down. So 132.30, I believe, is going to be support. Okay. Resistance. You can see we're below this trend line, but it hasn't yielded anything. So I don't know how important it is. I thought, you know, breaking below that trend line was going to be more important than it has been. But I think it's really just this neckline that's holding. We would have to get back above, what is this? 132.80 to even, you know, start to get the bulls re-engaged. And we have to get above 133.30. That's it. It is way up there. Okay. I want to keep it bullish, but we are at risk of flipping back to range, just as, you know, as the euro is at risk of flipping back to range too. Okay.
That head and shoulders pattern, Blake, I think missed the measured objective by about 50 pips.
Of the dollar Canadian?
Yeah.
Oh, no, we no, it's
much more.
Yeah, it's like 100 and that's why I don't think it's done yet.
Yeah. Okay.
Yeah, that's why I don't think
that's a good reason. Okay. And you know, it's just hanging there, probably trying to shake people out in here.
Yeah, that's one of the things about the dollar Canadian is it hasn't completed its head and shoulder pattern. If we were within 20 or 30 pips of that, or maybe hit the 200-day moving average,
that's a good
point. Up here.
Yeah.
I'd be like, okay, well, that's done now. You know,
but close enough.
We haven't even gotten, you know, close to that yet. So
that's why they call it the loonie.
It is. Hey, by the way, the euro just took out stops above 118. So just so you guys know, the euro is above 118. We're heading towards that resistance. Remember, 18. Now, this is one of those things that that we might make our way up here. We could just be triggering some stops too. Just keep an eye on the euro. Let's see how it reacts up here at 118.10. But it is bringing some dollar weakness. You can see even the cable is bouncing. The dollar Canadian just slipped. The Kiwi is moving. You know, it's kind of a situation where nothing else is moving. So you got the euro that's kind of leading the charge right now, and it's ushering in some dollar weakness across the board. So anyway, but let's see how the euro reacts up here. This could very easily just been a stop loss run. I mean, it looked pretty vulnerable if you ask me. So, all right, we'll see how it acts moving forward. I still got charts to go through. Let's see, moving down. Let's stop at the peso. So the peso we just hit new fresh lows. The 78% retracement comes in right here, and see this. The peso looks vulnerable. You can see right through here. I would not be surprised if we take out those stops and we trade to 22, 21, 23. I'm going to put the dollar MEX in range because we are back below this trend line right now. I'm not going to get excited about the dollar Mexican peso turning higher unless we get, you know, way back above up here. It traded really heavy yesterday. So intraday resistance 21, spike high right here, the high 21.57. Okay. Hold on one second, please. Moving our way down. Dollar Swiss. We are below that 618, but you can see all the support that we're testing right here. We have to assume that we're going to go lower. We just have to run that assumption right now. That support will come in at 91 cents, which is the 78% retracement of this last move. But you know what? And see the 618 comes in there too. So we could do this. There's the 618 from the actual low, the 78% of this last move. It all comes in just above 91 cents. So I'm going to put in 91 as being pretty key support today. Resistance is going to be way back up here. You can see all that resistance, that spike low, or that low rather, that comes in around 91.90. Euro is holding up above 118. Just some heads up with that. Looks like it's holding up pretty well. We'll see if that can continue. US dollar, Norwegian krona. We are also testing some pretty key support here. I think yesterday we wrote down 920, if I'm not mistaken. I don't have my bias chart in front of me, but from yesterday. But you can see all of this little support here. We might actually slump a little further to the 50%, which comes in at 913. Resistance. Oh, we'd have to get above yesterday's highs, which have been 930. So a lot of work there. Again, this is like, I want to keep it on bullish for now, but you know, we can flip back to the range. But I wouldn't be surprised, with the US dollar, Norwegian krona seeing something that happened like that looks like that, you know. Where are we at? Dollar yen. Once again, the dollar yen. The dollar yen, we stopped right here at the 105.80, which is the 618 retracement. Everybody should know that's the key resistance. I mean, we have to get above it. What I am surprised about is we took out that down sloping trend line and it couldn't hold. So that means, let me get rid of that. That means that is absolutely critical resistance. So that comes in at 108 or 105, excuse me, 82. That's key. Support once again is going to be down at 105. Dollar index. Dollar index support is, well, we are on the neckline right here, but the 50% retracement comes in at 93.25. Resistance that we have to get back above is going to be way back over here at 94. So I have a lot of work to do. Resistance at 94. Support 93.25. It's bullish, but we are at risk of flipping back to range if we can't, you know, muster a rally around these levels. We really need to start to, you know, turn the tide higher in the dollar index. If not, we are just going to end up being in a bigger range. Okay. S&P, you guys should know the levels right now. 34.25, 34.45. That's the 618. Whoops. 34.25, 34.45. We're still in a range. Support is at 3,300 still. We just got some Canada trade deficit data that it was wider than expected, just so you guys know. All right, let's go to gold. Challenging this downtrend line, but I don't know how significant it's going to be. But let's do this. $618 retracement comes in at 19.25. I'm going to write that down. We're in a range. Support is at 1880 is what we wrote down yesterday. I still think that's significant enough. All right. Bias chart is finished. So Stelios, Steve, good morning, guys.
Good morning, mate.
Good morning. How are we doing?
How you guys doing? Hopefully better than me. I am tired today.
I got 8 hours sleep, man. I'm good.
I hate you.
I have no idea why we're keeping this guy around. It just makes us feel miserable, Blake.
I've been on a boat. I got
yeah, I get 8 hours sleep.
I guess it could be worse. We could say this, Steve. I have no hair. Right? Anyway, yeah, it was one of those. It was just one of those random nights. I usually I can sleep. I got to tell you guys a story. When I was in the Marine Corps and I was 19 years old, I was on the island of Guam because Desert Storm. Half of the troops went to go do body cleanup, and the other half of us got stationed in random because I was in the infantry. We got stationed in random places. I got stationed in Guam for a little over a year. And I guarded nuclear weapons for a year, and I actually could fall asleep standing up in the jungle. Like I'm not exaggerating. Like, I mean, we're in the jungle, and I remember actually falling asleep standing up at like 2 o'clock in the morning. Isn't that crazy? Yeah.
Wow.
So usually I can fall asleep pretty much anywhere, and last night it just didn't work. So anyway.
Yeah. Blake, can you
back to Guam, Blake.
Can you put up the bias chart just for a second, because there's somebody who's saying
I can.
not enough time. I posted it on the chat room for people who are ForexAnalytix subscribers.
Yeah, you want to take a picture of that for anybody that wants to do that. Yep, there you go. So it's been a slow night. The euro just popped above 118. It looks to me like just a stop loss run. I mean, we went from a 35 pip trading range to 40. And so it's going to be interesting to see if we can sustain any of these moves. But it's been pretty quiet. I think everybody's still waiting for, everybody's waiting for
His Royal Highness.
Well, let's we're going to see what's happening in with stimulus, right?
Yep.
So I think the market is paused and waiting for it, and all the ranges are pretty tight right now. But how do you guys read the market at the moment?
Well, I think you're right. And what gets me is that the Democrats and the Republicans are actually not too far away. I think the Democrats are looking for a 2.2 trillion package, and the Republicans are like 500 or 600 billion away. So, the grand scheme of things, who thinks they're not going to agree? I highly doubt it. That they're not going to agree. So I think they're going to agree, and I think the market.
Why wouldn't they?
I think the market really believes that as well. Otherwise, we wouldn't see stocks where they are now, and basically seemingly completely oblivious to everything that's happening. So,
Blake, excuse me, guys. Blake, can you put the bias chart up just for one more minute? Someone didn't have enough. There you go. Go ahead, Dolce. Take your picture. Go ahead, guys. I'm sorry.
Yeah.
I guess one of the things regarding now I want to take into account that everybody's expecting the stimulus package, but the question really is, are we going to get it ahead of the election? You know what I mean? Is it gonna arrive? They could come to a deal in principle and say we're going to deal with this, after the elections. I don't think the market's going to take too kindly to that. I think the market is expecting more than that.
Yeah.
I think the Republicans have already lost this fight having to do with the stimulus package, because when in principle you start agreeing in trillions, then you just look cheap. I've said that before. I mean, the problem is that I'm looking at both the parties and having to do with their economic policy. I see very little differences. I mean, both of them want to spend like exorbitant amounts of money that don't exist and create huge deficits that nobody knows who's going to repay and when. Of course, the question is rhetoric. So in the grand scheme of things, the debt has already increased by 4 trillion year to date. In the grand scheme of things, I mean, numbers have stopped having any meaning. I mean, I really don't see any difference in 2.2 to 2.5 trillion or whatever. This situation is completely crazy and unsustainable.
I agree. And there's an interesting thing. Do you watch John Oliver on TV, Blake?
Oh yeah, he's funny. Yeah, I catch his weekly thing every once in a while. Yeah.
I was watching the one he posted yesterday, and he makes a very interesting point. The result of the elections is not going to be known on the night of the elections or the day after, because of all of the vote counting that's going to happen from mail-in ballots. And if you look at polls, people have been asked, are you going to vote in person or by mail? And I think 50-50 for Biden are going to vote by mail, and an overwhelming majority is going to vote in person for Trump, the Trump supporters. So I think you're going to see on the night of the election, as things are getting counted, I think we might see Trump being ahead. But obviously, until everything is counted, things are going to change. I think after the election night, there's going to be some volatility in markets, because there's going to be a swing between, who's ahead, or this guy's ahead, or no, the other guy's ahead. So
the thing is that might take weeks to resolve. And imagine
they said 3 to 4 weeks.
It's possible. There's a and you see this headline that's Trump Biden tied in Florida. This is one of the key battleground states, and I'm going to try to find really quick this Goldman piece that I have on the election that came in. I think it was Friday. I got it. I want to say it was Friday. Hold on. Just give me 1 second. This is a really interesting. Hold on. I can find it quick. Just give me. Whoops. I'll find it. Let's see. Oh, here we go. This is, I'm going to just pull this out. I'm going to pull a picture out for you guys really quick. This is from Goldman. Okay. And I'm just going to pull you out just this one little excerpt, pulling it over now. Okay. So let's look at this right here. Knowing the outcome of Pennsylvania, Michigan, and Wisconsin provides the most information about the state of the overall race. Okay. Florida and North Carolina are the next tier of states in terms of overall importance. All right. And then don't sleep on Arizona. Arizona is one of the states where I live where we can flip from red to blue. We haven't been blue in the state of Arizona. I think even before I was moved here in the 70s. So I'd have to go back and check that, but it's been a red state for as long as I can remember. So the three states that are really most important to be watching are Pennsylvania, Michigan, and Wisconsin. Do you know what one of the big problems with like Wisconsin is right now?
COVID.
Nope.
COVID. Yeah, they're seeing a massive wave come through, and I have a friend of mine that was working there, or is working there, who just got there last week, and he was like, "Yeah, I was going to meet up with a couple of my coworkers, and we talked about where should we go." And he's like, "Well, look, most places are closed. We're getting we're getting another wave of COVID, and so, but when it's affecting people's lives like that." And I was talking to a few people about this regarding President Trump getting COVID and coming out of this, and like we were talking about, well, why is his polls amongst seniors deteriorating so bad in the polls? Because if you're a senior and you're let's just say over the age of 65 and you're watching all of this transpire, now it's kind of fight or flight, right? You're going, oh my gosh, look at the handling of COVID. Am I going to be around? Am I going to live through the next 4 years? And then look at how it's being handled, and how many people have died, and so this situation is now starting to hit home with some of the seniors. But I point that out because a lot of them reside in these states like Pennsylvania, Michigan, Wisconsin, tend to be older demographics as well. So that's gonna that's gonna make these three battleground states really important. Florida, North Carolina, obviously, and then Arizona as well. But I thought I'd show you guys that because we've got to watch those states on election night. There are going to be some states that will give us the better picture, right? Because we already know which ones are the gimme states. So anyway.
Yep.
Yeah.
By the way, I remain very skeptical about the dollar and its prospects to move higher, and people have stopped, paying attention to the data. But it's worth noting, Blake, that at the bottom of the hour, I just didn't want to interrupt you. We got trade deficit.
Yep.
And it was the worst trade deficits of the past 14 years.
So you're telling us it's been better? Okay.
Yeah, I mean, I hear what you're saying, and I understand what you're saying. But one thing that can't change overnight and is not going to change overnight is the dollar's role as a reserve currency, no matter what.
It won't change overnight for sure.
It won't. What I think we will start to see is, if we see some sort of risk off activity, you'll see the dollar's impact will be less and less and less. You know what I mean? And I think it'll be filled more. Those rules will be filled more by whether it's the euro or other currencies that will fill that role as
Remember during the summit, one of the questions was to the panel that we had, what keeps you up at night? And Peter Schiff said, heartburn. And then I can relate to that. And then he said, and the dollar will probably crash when we're sleeping. And I said to him, don't worry, Peter, your heartburn will wake you up. So he won't miss it. But anyway, he thinks it's going to happen.
By the way, the euro slipped back below 118. To me, it just felt like a stop loss run, and you can see we're, obviously coming back down again. So
maybe it was Forex Stop Hunter doing something there.
That's Forex Stop Hunter doing some work. Hey guys, just remember, we are back to our regular scheduled program. If you guys want to try out ForexAnalytix, it's only $1 for 10 days. The pricing, obviously, we removed the pricing, so you can't get that offer. For those of you that took advantage of it, welcome to the ForexAnalytix family. For the rest of you guys, if you want to try it out, remember it's only $1 for 10 days. Try it out. If you want to learn how to get ForexAnalytix possibly free for a period of time, visit our ForexAnalytix sponsored page. We'll show you how you can open up an account with Pepperstone if you're outside the US and Canada. And then also if you're in the US or Canada, make sure you talk to Forest Park FX so you're getting cash back rebates on your trades. If you are trading retail and you're not getting cash back and you're in the United States or Canada, you need to talk with Forest Park FX. All right. And if you want to try to get ForexAnalytix for free for a period of time, open an account there. Now, we are going to be doing our giveaway. So myself, Steve, Stelios, and the team will be preparing for, how about Friday? We can announce the winner. Sound good,
Yes,
Steve?
Friday
Yeah,
sounds good.
I need to collate all the entries and we put them on a spreadsheet, etc., etc. Yeah.
Yep. So we're going to be doing that for all of you guys that retweeted us and responded to the ForexAnalytix handle. Thank you very much for participating, and I hope you win. I'm rooting for you. So, all right, guys, I'm going to pass it over to you. Have a great day. I'm going to go take a nap in a little bit.
Thank you, Blake.
You do that, mate.
See you, Blake.
Bye-bye.
So we're getting closer to the US elections. Donald Trump is apparently doing very well, according to his physician. And that's on that side. We did have the RBA interest rate decision, Cape rates unchanged at a historic low, 0.25%, so basically close to zero. And they obviously they were expected to hold, but the accompanying commentary was just like every other central bank, really quite conservative. They talked about the uneven recovery of the global economy, the coronavirus potential second wave could be severe, and inflation very low, which is true. So they're keeping it quite calm and not showing any kind of hawkish signs. And why would they? With every other central bank being dovish.
Having to do with inflation being very low, for those that inexcusable, of course, nowadays, because we've posted the recordings for so many days, that didn't listen into the Trader Summit. You remember still the conversations about inflation and how inflation, in essence, has been very low for people that are rich and very high for people that are poor. In essence, there are two inflation rates, and that, of course, depends on what are the products that you're actually buying, and what is the main, your main expenditures. If it goes towards necessary items to survive, like the supermarket, etc., or
healthcare, education. Yes,
exactly.
Yeah.
So inflation being low, not so much. I mean, you've been to the supermarket recently. I see big price increases, and I would say that with the exception of gas, which is at logical levels, everything else that's consumer based and necessary, I think it's either same price or higher, or some of them quite a lot higher.
Yeah, that's true. What else to say? The UK obviously will remain in focus as we go into the year end. Blake mentioned that the EU is basically playing chicken. Both sides are playing chicken. Having said that, there is going to be a meeting today, apparently, between Barnier, the chief negotiator for the EU, and Boris Johnson at number 10, if I'm not mistaken. And, my view remains the same. Just like with the Republicans and Democrats, both sides have interest to get something done, especially during a time of a turbulent time like now, COVID and everything that's happening. So I think in the end, they will find some kind of solution. Actually, somebody wrote very funny. They said Barnier and Boris Johnson are going to be meeting today. And they wrote that underneath. So they're going to be having fish and chips for lunch, which is funny because of the fishing argument. But yeah, that's my view. So I would love the pound to get euro pound to get up to 92, 93 if it can again, so that I can short it.
Technically speaking, this rebound doesn't look, this bullish.
Yeah.
We're actually now back testing this key area of resistance at 130, confluence of multiple resistances. I think from a risk reward perspective, this looks like an interesting area for a rejection. But of course, as you said, if something positive comes out of the meeting, the pound should, get a nice boost to the upside.
Indeed. And that's it from me. There was nothing else. We have some data of the US in about an hour's time, but Construction
But
PMI actually in the UK came in stronger than expected, which is a little bit odd because the weather had been not very good. But anyway, you know, numbers in general in Europe, in the US, in the UK, they're coming out a little bit better than expected. So the same theme as we've seen, German factory orders as well, stronger than expected. But remains to be seen how we progress from here going into the winter. So that's it from me.
I think that a big part of the recovery is, you know, in essence, completely artificial. And unless they keep on, you know, throwing trillions and trillions on top of it, you know, there's going to be, another leg lower to the economy. So we have to see what's going to happen. One way or another, I'm not very optimistic about how things are going to evolve from here. Having said that, I'm going to start with the DXY. If you remember, I talked about that yesterday. I'm tracking this ascending channel. This move higher looks totally correct to me. You know, both the area from which we got rejected and the fact that we're testing now the support. If we break below it, I seriously don't see any reason why the DXY can't push lower towards the 90 area. But you know, you want to buy it, you know, you do it exactly here, because as I said, we break lower from there. I don't think we're stopping. I don't think we're stopping until we get below 91. So that's my point of view here. You know, in the same manner, hasn't changed my point of view here, having to do with the S&P. S&P likely is going to, S&P back tested this 3390, 3395 area earlier today, seems to be holding a support. So I do think that the path of least resistance is higher. And of course, you know, these two go well together. I mean, if we see, risk being bid, most likely we're going to see the dollar continuing lower in any case. I mean, even when we see risk off, the dollar's reaction is, a lot smaller than it used to be, and that tells you everything you need to know about it. Crude oil, on the other hand, second consecutive day of recovery. I'm watching this trend line resistance, which is currently where we are. We break above that, we might not see another low. We might have seen this correction, and this correction might have been this triangle, right? In which case I would be looking for a higher high before we see a deeper correction, perhaps something like that. So in any case, I don't see anything on the charts that at the moment tells me that I should be like long the dollar and short risk. Anything. Speaking of which, I did add to my position yesterday a short USD NOK, and that's the reason why, because we're breaking through this trend line support, and I think we're going lower. My initial entry was at around 1070, so I'm very deep in the money, so this was a nice place for me to add. I now have half of a position, and I will slowly increase it to full, and I intend to hold this for a long period of time. So my only FX position at the moment is short the dollar, and I'm totally fine with that. Now, as I said before, indices, nothing to see here. I mean, the path of least resistance remains higher. Forex Gal wants to see the weekly chart on the DXY. I wonder why. Let's see. Here it is. We got rejected from that trend line resistance. Now, a bullish case scenario, would be something like this. But of course, this trend line support is a little bit arbitrary. I just, drew it to be there. In any case, as long as we remain below this trend line resistance, because as I said, this trend line support, trend line, I don't know how valid it is. We're going to have to find out. As long as we remain below this trend line resistance, the path of, least resistance is lower. So 88, you can see here on the chart, 88, in essence, the next downside area, if we break lower from here, which I think there is a very good probability we're going to do so. There's somebody asking for the Nifty for many, many, many days, as they say. So here's the Nifty. So Nifty, probably a corrective pullback. I mean, it was clear from the way we moved lower because, we did break through this channel, but, once the move had no acceleration to the downside, it was more than clear that, this is not a breakdown. This is just a correction. So, this also bodes well with, what I said previously. I mean, the vast majority of the indices look decently at the moment. They look like they're about to post another leg higher. So Nifty is no exception here. So why not another leg higher? We're breaking through this little flag. Why not? We might retest the 12,430 highs. So that's it about the Nifty that you're asking. Coffee, sugar. Yeah. Give me tickers, please. Have I saved those anywhere? I wonder. Here. Yeah, just give me tickets and I'm going to have a look at them gladly. Sugar, corn. Yeah, a lot of commodities. So give me tickets and we're going to have a look at them.
I think sugar is SB.
SB.
Oh, they have an ETF, cane. But sugar is, I believe, SB. There it is, right on top, sugar futures. Cane. Okay.
So short. Dale, what do you think?
I'd be looking to short it.
Yeah, this move doesn't look impulsive to me for sure. Yeah, sugar doesn't look. My God, look at this chart.
Yeah. I like the grains more. Grains all
look
good.
At this chart. I have no idea what the fundamentals are here, but doesn't look good to me. Doesn't look good to me at all. I think that sugar is, and look at the other side.
Sugar will give your account cavities.
Yeah, very likely. If you want to be long, doesn't seem like a good proposition. I think that sugar.
It might go for that upper line again, but
it might. But yeah, eventually, it looks to me like it's gonna plunge lower.
It's been 2 cents before, but that was in the like 60s or 70s.
I don't think you can expect 2 cents again.
Coffee,
Joe,
a little bit.
Joe ETF, that doesn't seem to be right, is it? Coffee, yeah, seems to be.
Yeah.
This is one ugly looking chart in the sense that it is very it's very bad looking.
Pulled back into a gap, but I don't know how well traded this is.
Yeah, I mean, this thing isn't looking good, very choppy.
Yeah.
Yeah, I don't know. I wouldn't be trading this. I can tell you that much. I mean, it seems to be like in a long-term.
Now pull up any grain and compare it to what you just looked at in the.
Yeah, they've exploded higher, haven't they?
Yeah. And we have Angie on in a minute or so, and that's her wheelhouse.
Which grain do you want me to look at, Dale?
Soybeans. They all look pretty much the same. There it is.
Commodity trust soybean fund? No, I guess. Soybean future.
Yeah, there you
go. Let's see the next. Yeah.
So they all look like that. They've all come on a real long-term basis.
Quite a big breakout here, right? And as you said, this looks to me like a long-term bottoming pattern.
Yeah.
There it is.
They all kind of look like that. Corn and wheat, and it's the opposite of the softs. Yeah.
This looks like an impulsive move. So now the question becomes, where do you buy it?
On a pullback towards 950 or so.
I guess if you're lucky and you get it somewhere here, right?
Yeah.
Yeah. And resistance, I guess.
Beans in the teens in 2021. Maybe there's
Resistance
still 2
somewhere
months
there.
left. Yeah.
Yeah, so perhaps, if you get lucky and you see something like that, right, that's
Yeah.
going to be great. But yeah, this looks like a major breakout. And look at the RSI in this move.
Yeah.
Look at the RSI. 88 on the daily.
Yeah.
Yeah, I think this is really
I think
worth.
Steve's going to be looking to buy a pullback in beans after this.
Doesn't look
Anyway,
bad, I can tell you that much.
Anyway, Steve, I'm 2-20 on my advisory fees.
Okay.
All right, buddy.
Sounds like a plan.
All right.
Okay,
So
Dale,
we
who do we have today?
perfect segue to Angie Setzer, the goddess of grains.
Okay, perfect. So let's see what she has to say.
Welcome back, Angie.
Thank you. Thank you for having me.
What a great time to have you. You know, I was thinking when I don't know how many months ago I invited you, but, you know, I was watching the bases technically happening in the grains. Do you want to share your screen?
Sure. I don't really have much to share. We can pull up some charts if you want.
Yeah, we
here,
pull up some charts.
Go ahead. I mean, I don't have anything super fancy, but
all right. Well, I could show them then.
Yeah, go ahead.
Would you rather me do that? Okay.
Yeah.
All right. So Steve was just looking at the bean market, and we like the technicals. I mean, it's hard not to like the technicals. Tell us what's happening there fundamentally. We recently had a report, and is carryover kind of low going into next year, or what?
I mean, to be honest, it's not. It's quite a bit different than where we were a year ago, though. It is cut, close to in half. So I guess that's enough of a catalyst. But a year ago, we were looking at close to 1 billion bushel of soybeans, which is about 10 times the needed number that you could say for carryout to make things feel like we need to be rationing demand, right? Much below 200 million bushel is where concern starts to develop. But what we've seen, I think from a fundamental standpoint, and I think you can see it when looking at the chart, is from an emotion standpoint or a psychological standpoint, we've seen some pretty dramatic changes, especially with Chinese demand. And if you take a look at when this thing really kind of bottomed out here, just ahead of the August USDA report, if you look at the historical export announcements, because we get if there are sales made to a foreign buyer on a daily basis above 100,000 metric ton, we will get export announcements. And so we started around the first part of August seeing these daily sort of Chinese purchases that have really been absent the market for the last couple of years. We saw Brazil export record amounts of soybeans, April, I believe March, April, May, June, July, and into August. And so a lot of folks really caught flat-footed with the idea that China had bought all that they could buy, based on what their export pace has been. I think one of the big misconceptions in this market structure here over the last couple of years that has allowed for this bottoming, is that ASF, that African swine fever that China was dealing with, that cut their hog production, in addition to COVID, that these two things were bearish demand, when the reality is just the opposite. ASF coming in, one of the biggest issues that China had with ASF was biosecurity. A lot of their hog herds were small backyard herds where, a lot of the farmers were actually feeding food scraps to these hogs, versus what we see here in the US and in other places with a modern hog producing setup, where you have a strong ration of soybean meal and other byproducts, corn byproducts, things of that nature. And so
we feed our hogs better here.
Yes.
We ought to try that with people.
What do you think, Angie? Thing to pin down some of that nutrition that we're feeding to people for sure. But so what we've seen in China is with the implosion of the hog herd due to ASF spreading, which is a very deadly hog disease, We've seen this basic significant push for a modernization of their hog herd, which in turn has allowed us to see this increase in demand that I think not a lot of folks were necessarily expecting. In addition to that, we saw an extremely dry August, which is very important from a production standpoint for soybeans. So it took some of those lofty production expectations kind of and put them up on a shelf for the time being. So you saw this perfect sort of meeting of demand increasing and supply being cut as well. And so that was just one of those things that really kind of allowed for this explosion in this $1.50 rally that we've seen.
You know, Angie, I saw an article on Twitter about the Chinese being in what they called I believe, a soft famine, where they're reducing the amount of food that everyone's getting. Do you know anything about that? Have you read anything about that?
I've seen some conversations about it. Yeah, I've seen this.
Is that the correct term?
I would say I think you're training your people to do with less. And that could come, that could be because for a whole host of reasons at this part, none of which I'm sure of, right? I mean, that's the hardest part about China as a whole, is really trying to pin down, what is the push behind this? The idea that they would, just suddenly run themselves out of food, which has been kind of something that's picked up some traction here recently, I don't think is accurate. China knows what they're doing. And then you have to really be careful not to toe the line of going from reality to conspiracy theory for me, because obviously you cannot ignore what's taking place with Taiwan. You can't ignore, sort of some of their military buildups, some of the things that they're doing domestically. Are they preparing for something that is beyond?
Well, that's a pretty radical step, don't you think?
Yes, it's extremely radical, which is why
no one's talking about it, Angie. And could it be the army worm? There's all kinds of things happening to their food supply, and it could be, maybe they're planning, getting ready for, some things you don't want to even think about. But
exactly, and they had some poor weather that they were dealing with. They've obviously had COVID issues that are relatively, we don't know exactly what it is. It does appear as though they're moving much freer. There's a whole host of articles about folks on vacation there for the first time in several months and traveling out of the areas that they're in. But a lot of this that we're seeing right now, this upside movement, is due to the fact that China has come in and made purchases that were completely unexpected and relatively large in comparison, especially to what we've seen since the impetus of the trade war in 2018.
Yeah, so big factor there. Do you have the same type of, are they coming in? I remember from interviews that we did some time ago, you told me that they were stockpiling wheat for years. Does that continue, or have they shifted emphasis to protein gold like beans?
Yeah, I think the protein goals are big. I think they have a ton of wheat, but I think, also when we were talking about them stockpiling wheat, one of the things that's important to remember is wheat doesn't necessarily keep very well. You have bug issues, you have shrink issues, you have a lot of issues that you can run into. Now, the question is, what do you believe? If you look at USDA numbers, we're actually going to have a record large global supply of wheat on hand. Global stocks and global ending stocks are expected to increase this year with and without China. Now, the question obviously is, right now we're experiencing a drier fall. So a lot of the wheat, and all of the wheat, winter wheat anyway, in the northern hemisphere is being planted, as we speak. So drier weather, sowing into dry conditions is a big question, obviously, of what that's going to mean for production and yield capabilities long term. And so really, when it comes down to it, we're really just kind of watching this drier weather pattern that's been kind of entrenched in the Black Sea region, specifically the wheat belt in Russia and portions of Ukraine. A lot of analysts up there or out there say that the wheat crop's being planted at a record pace. But the question, of course, is if it doesn't catch a rain over the next 2 or 3 weeks, what does that mean for long-term production potential? And that's enough to really kind of get this thing some legs underneath it. There's been some conversation about Russian export restrictions, but that seems to happen every year about this time. It seems to be a great way to kind of convince the growers there to plant wheat because it runs the price up. And so we really haven't seen any confirmation on that at all, but we're watching that. And of course, the export increases. China, for having that large stockpile, it has been, or had been, we haven't seen them really show up much lately, but they had been coming in and buying wheat from the US as well.
Okay. Ever hear the expression from a CBOT floor trader that they're not doing well if they're trading oats?
Yes. Yeah.
You've heard that before?
Yeah. Oats are like the last grasp, but if you can't make money on anything else, you might as well try oats.
Well, it's because the beta is lower, and they could, they could trade it with a smaller account. Anyway, that was just got to pick up Jack's new book when it's out, The Unknown Wizards, Traders You Never Heard of. So he's got a new book out, and he features Peter Brandt, and that's what Peter said. Someone on the floor is having a rough time when they move from the bean pit, to the oat pit.
Yeah, I can imagine too. It's the risk of loss is much less in oats than beans.
So is the dollar going to be a big story in this? A lot of dollars come off quite a bit, just in nominal gains for grains, don't our foreign buyers get a little more aggressive when the dollar's going down? I mean, the dollar was going down when China came in for the beans, right?
Mm-hmm. Yeah, I think it has a say in a lot of things. What I've found over the years, though, and of course, I've been doing this for 15 years, and it feels like the dollar's been strong for just about all of them, and so it's easy for me to say this. It feels like when it's lower, we don't hear about it as much, right? When it's encouraging sales and shipments and things like that, eventually it just kind of fades into the background, versus when it's higher and the market is struggling, it's easy to say, well, it's the strong dollar that's doing it, and so the dollar will definitely play a role. Obviously, the real is still incredibly weak versus the dollar, which is giving the Brazilian producer a lot of incentive to really expand their production, especially if they're able to catch the rains. Right now, there's a lot of rains forecast into next week down there. They've been really hot and dry, which has also been part of what has pushed this bean market higher, is this whole idea of, oh my goodness, we've been choking on supply and we've been really missing out on demand. And suddenly we have an ability to say that supply may be a lot less than anticipated and demand seems to be a lot greater, both in the northern and southern hemisphere at this point. So we'll definitely be watching what takes place with the Brazilian weather and that Brazilian producer, in the weeks ahead, because they're really working to get that crop planted here as well.
Okay, I have a couple of more topics I want to cover. First of all, have farmers recovered from the hit that they took a year or so ago from China not buying any of our agricultural products? I remember seeing a lot of media about what was happening. I just lost 120,000 because I can't sell to China. Have they recovered, or is it kind of like what happens a lot in a capitalistic system where they lose it and some big corporation comes in and buys their farm, and now beans are $10 and the guys that were sweating it out aren't there for it?
Yeah, I mean, there have been some instances where farmers, aren't farming anymore. They've made the decision to leave, or they just have not found a way to be profitable. The government has stepped in. I mean, it's
there's been support.
There's been a lot of support, and so I think that's helped a lot of these growers to really kind of stay in. And a lot of it depends on where they're located. I mean, there is an overabundance of supply in certain areas that have made the cash price these farmers have received, significantly less than maybe some of these areas where demand is great and has been built up and is supportive to the market, even if the export business isn't quite there. The market never got as low as what a lot of people had anticipated. I mean, it was a struggle there for a while, but the idea that we were going to see $6 soybean futures, we're only a year removed from that,
Right.
and we never saw it. Did we see sub $8 cash prices in a lot of areas for a lot of folks? Sure. But one of the nicest things about farmers or having a commodity is the ability, if you're fortunate enough, or if you're lucky enough, maybe I think I'd rather have luck than skill a lot of times in this business, is you can kind of wait out some of these harder, the really hard crashes that you see, if you're patient or have that ability. One of the things that the government support did was allow for cash to be covered, cash needs to be covered, and maybe not have that farmer forced to sell into the downward market. So I think there's been a significant amount of recovery from that point. But one of the things that we're running into right now is that we've created this system that's based on aid coming in. And so what that aid coming in has done is instead of seeing a reset perhaps in land values and rental values and input costs and things of that nature, the idea is that the farmer has plentiful cash supplies, whether that's accurate or not, which I would say is not accurate, but the idea is that the farmer has these plentiful cash supplies and is capable of paying more. And so one of the things that we run into with that is when you remove that aid and the prices don't correct, I mean, eventually it's just like any other.
You get squeezed on both sides. Revenue,
yes, exactly.
Your revenue goes down because the aid stops, but your costs go up.
Yeah, your costs at least don't drop, in direct correlation to what your value or your revenue gains, are. And I think we see that, that conversation and stimulus and things of that nature. Obviously the economy wants to see that stimulus or needs that stimulus in order to maintain a certain level of growth. But eventually you've got to figure out how to allow that to survive, or how to, is there risk or is there not risk in this thing? So, we've seen a reasonable correction, especially with the demand coming back in here recently, and that aid that was put out, to kind of act as that bridge from there to here. But it'll be interesting to see, what happens as we move forward. The second round of CFAP that was released a week or 10 days ago, it was kind of a surprise. I don't think anyone was really anticipating to see that amount of money to come in. And it was 23 cents a bushel for corn, 31 for beans, and 39 for wheat. And that was a decent chunk of money for a lot of folks. So it'll be interesting to see, over the next year, next 4 years, next 8 years, how.
So, can the government continue to support this economy with trillions and trillions? What happens when, I don't know if you notice, but someone's noticing. Look at what's happening to yields right now. And, and didn't Paul say that they're not thinking about raising rates? And we have some pretty sticky yields right now. And actually looks like, if you look at a weekly bond chart, that we have a big breakdown in the bond market this week.
Yeah, it's a concern, right? At what point do you, and I think it's a very big concern in agriculture too, and it prompts a lot of questions. Obviously, is this do you get into grains as an inflationary play? Do we see that? I mean, us and me, I'm stuck in this industry, or stuck in these markets when they're good and when they're bad, and
right.
Like I said before, I'm going on 15 years, and this is the second time here where we've really had the conversation about grains as an inflationary play. The first time we saw it, though, we never really saw that inflation develop. Right. Now you could argue, that it made sense to go long in the fall of 8 and, hold into 2010 and beyond on that. But there were a lot of other fundamental, supply and demand reasons that really kind of drove that market. And maybe it was amplified because of that outside interest coming in. It'll be interesting to see, how does it work? Most of the smart people I talk to right now are saying this is not something that we can continue to do. Yet it seems like every time, the powers that be speak, it's something they say they're willing to do. And so that's really something that makes this whole entire market structure even more interesting as we move ahead is to.
It's a riddle.
Yes. Yeah.
The markets are a riddle.
For sure.
Let me ask you this, Angie. Farming can be done in a solitary way. I mean, you don't have to, have four or five guys jump into, a piece of John Deere equipment, a tractor or something. How has COVID affected farming? And has it been more on, the side of, after the, everything's brought in and then you have to process things, and the actual farming has tolerated COVID pretty well because it's not something you have to do with a bunch of people.
Yeah, I would say the farming aspect in and of itself, getting that crop planted and growing it and harvesting it, has really remained pretty unchanged. I myself, as an office person, worked from home but was still working. I think the biggest effect that we had on farming, was the easiest one to say would have been, just what it did to demand for a short period of time, especially, ethanol demand is paired directly with gasoline demand. So to see that cut to gasoline demand, really kind of brought in the whole entire question of whether or not the ethanol players were in this long term. We still haven't seen them come back to pre-COVID production levels, which is something that, is actually probably necessary. And so the other big impact that we saw there from COVID was when we had the processing plants shut down. And that was one of the bigger concerns, was where we would take these animals that were ready for harvest. And so we saw a couple of those things, but in reality, outside of just the market impacts that we saw, and really the big fear of unknown, I think, which we always live in a world of unknown, but this was amplified, 100-fold here. And so, when it comes down to it, the farming itself wasn't changed, but perhaps the ability or the comfort that was coming from having, this end user or something of that nature, available to you was quite a concern, and it'll stay with us. The counterparty risk exposure that we learned about, I think will change how a lot of people do business as we move ahead.
Okay, well, look, I'm subscribing.
I appreciate it.
To your blog, and I know everyone in here that's viewing it now or sees the recording, their interests may be, FX and away from grains, but I really think it's a good time to learn about grains. And Angie really knows the business, so this is where you could find her, and on Twitter at Goddess of Grains. So when do you have your festival where you're all,
our Harvest Moon Festival? Once a blue moon, so we're scheduled for the end of the month, right?
Oh, that's right. We have a blue moon, so people will come to worship you with baskets full of beans and corn and wheat.
I expect that this weekend. That's the weather up here should be pretty good. So I'll be drowning in beans by Saturday here. We'll have a lot of beans to move. So I'm looking forward to it. It's been a while since we had a decent.
All right, and you know what? And Angie really does have her hands in it. She's in the business. She does it. She comes from the background. You want to learn about grains? Here you go. I'm bringing you a resource. Angie, thank you so much. Let's not have, I'll get a hold of you on Twitter, and we'll get something going in December to see how the year is finishing out for
back in. Yeah, sounds great. I will be there.
All right, everyone. You're listening to Angie, Goddess of Grain, Angie Setzer, and go to her website. Here it is, businessoffarming.com. Thank you, Angie.
Thank you.
All right, everyone, that's a wrap for Turnaround Tuesday. Hope you enjoyed it. Let's just see what's happening in these markets here. Euro's up a little bit. Aussie Kiwi. This I still, think it has a chance. I was looking at the gold. Gold's pushing up around the highs again, right here. And look at how much weaker silver is compared to gold. And it's been this way for a while. So anyway, that's a wrap, everyone. Enjoy the rest of your day. And we'll see you on the radio. Don't just count your pips, count your blessings. Adios.